I'm Praveen Kumar Vanchi, the Learning Champion at the Advanced Management Program of Healthcare 2024 at ISB. I'm going to be MC today for the panel 2. The panel 2 is catalyzing the next wave of growth in Indian healthcare, attracting the next $10 billion investment. Against the backdrop of the resilient growth of the Indian healthcare sector, in the aftermath of the COVID-19 pandemic, private equity firms, both domestic and international, have played a pivotal role. The contributions include facilitating accelerated growth, enhancing performance, and introducing clinical advancements in the company they invest in. Notably, in 2023, these firms injected a substantial $4.6 billion into various segments of the Indian healthcare industry, spanning pharmaceuticals, healthcare providers, payers, medtech, and health tech companies. The panel, comprising of experts from both private equity and the industry, will engage in discussions to provide valuable insights on new investments opportunities within this rapidly evolving sector. Let me introduce you today to the panelists for the session. We have our moderator, Dr. Rana Mehta, from Partner and Leader Healthcare, PwC India, consulting and driving values across the healthcare ecosystem, driving private equity transactions on acquisitions and delivering value. Our next panelist is Himanshu Nima, Managing Director, Warburg Pincus, actively involved in investments in healthcare and business services, including logistics and technology services. The next panelist is Professor Prateek Sen, Assistant Professor, Strategy of Indian School of Business. His research insights includes business model innovations and their impact on corporate strategies, strategic alliances, and private equity portfolio strategies. The next panelist we have today is Visalakshi Chandramouli, Managing Partner, Tata Capital Healthcare Fund, actively involved in portfolio management through presence on the board of committees of investee companies. The last person, but not the least, is Vishal Bali, Executive Chairman, Asia's Healthcare Holdings, experienced in healthcare, M&A, post-merger integration, and divestments in the rapidly evolving healthcare sector in Asia Pacific.
And it's wonderful being here. I hope all of you can hear me. It's always wonderful to come into campus which looks more like a US campus. I've been here many times, but every time I cherish coming here again. Thank you. I have really a distinguished panel and a very exciting component what we're going to talk about. For one of the biggest things for any industry is obviously the access to capital. And I'll tell you a story about Indian private healthcare, which just started about, say, three and a half decades ago. So in my previous stint, I used to work with the Apollo Hospitals group. And Dr. Reddy would tell me that, once he started the hospital, he actually needed to get a loan done. So he went to one of the public sector banks, and they said, a loan for a hospital? Nobody makes money in hospitals. Why would you give? We don't give loans to educational institutions and hospitals. So guess what? He actually went and met Rajiv Gandhi at that stage. And he convinced Rajiv Gandhi. Now, Rajiv Gandhi had, took out a scrap of paper, wrote to the SBI chairman, please give a loan. I think that's history, right? Today, I think it's the other way around. There is so much of capital which is coming into healthcare. And that's a very strong demonstration of the fact that the industry has done very well. While Nachiket said these are early steps, it's still very small compared to where it needs to be. But there has been a major growth. I think the second part which is coming in is when we look at healthcare models for India, you have three accesses to healthcare. You have a geographical access, and 70% of India's healthcare infrastructure is just in 20 cities. And that's not changing. You know what's happened? Because the cities are getting larger, right? So, even if you came 10 years ago, we'd be sitting on barren land, at least 20 years ago in most of this. The second is a financial access. And again, Nachiket said, through the PMJY scheme, 500 million people have a financial access to care, and that's growing. And that's something we'll talk about. But I think in India, it's always going to be a technological access to care. We're going to have a very different model than any country. We are at the same place where the United States was in the 1960s. They spent 5% of their GDP on healthcare. The government was moving away from a provider to becoming a payer. It was Medicare, Medicaid. But I think we have one great advantage. We have technology, which they didn't have. So as you heard in the first session, this can really, I think, catalyze the growth of healthcare in India. And tomorrow you talk about the US healthcare system, you talk about the NH healthcare system. I think you can talk about an Indian healthcare system which will actually give us boundless opportunities in a borderless world. So let me start. I'll start with Vishal, who's been the veteran. He's seen this right from the beginning where, probably even at Walkard, he had difficulty convincing people to give a loan to where we've gone. So I think an amazing momentum, right, in the last 3 years. So Vishal, do you think this is going to continue, get better? And what do we need to make sure that this does get us the 10 billion?
Yeah, that's a very interesting question, Rana. And firstly, to the ISB team, thank you for the invite. Always a pleasure to come here and spend some time with the students and with the larger group of people over here. I guess many of you are from the sector. So let's just quickly roll back, right? I think healthcare for a long period of time, and it's not just the last 3 years, but I would say that this has been almost like a decade now, where healthcare has been on the forefront of private equity investments and venture capital investments, right? And Himanshu and Vishal Alakshi are here, and I think that that momentum has just picked up a lot more in the post-COVID era, because everybody just realized that this demand-supply gap which is there is just so real because of what was happening during the COVID time. So I think the way that the scarcity in motion, which Indian healthcare truly is all about. So we often keep talking about less doctors, less nurses, less hospital beds. But if you even put all of that aside, there is just a massive demand-supply gap to be filled up. Now, for any investor, that's a great position to be in any sector, right? Where you have so much of demand coming through the door that all you need to do is put the supply side in place, and lo and behold, there is great value to be made. So I think the macro is obviously in favor of Indian healthcare in a big way. And that is the reason why there is so much of capital that is going behind almost every model of healthcare that we are seeing over here. I think the bigger challenge, which are probably yet to be faced in a big way, is that while we can go and put the real estate and the beds and and the infra, which is not so difficult the moment you have capital, I think the issues around talent are very, very real. And that is what is going to be the biggest roadblock of this future growth. And this talent is both on the clinical and the paraclinical side, right? I think all this, we can say the momentum that is happening around the medical colleges and the push to create more and more medical colleges in the country is great. But it should not just remain empty infra, because where is the leadership around the teaching faculties? And that itself is not there in a big way. So I think what we are facing, frankly, Rana, is a great opportunity, which is almost at an inflection point of massive amount of capital that can be put behind. We are seeing great consolidation happening in the sector. We are seeing early stage companies getting exponential amount of capital, which also is not really very great in some ways. But I think what is more important is, from a sectoral headwind perspective, how will we manage some of these changes so that this inflection point truly becomes almost like the foundation for the next 10 billion to come in? Because the 17 has come in over a long period of time.
Yeah, it's come over a long period of time. The other thing, you were telling me is the nature of capital changing, right? So you're now looking at, sovereign wealth funds, which have a far longer horizon. Because, if you look at healthcare, having a stable beta, it becomes like a utility company over a period of time. So it really matches with what they want to do.
Yeah. No, that's very true. So, you can see how much the sovereigns are now beginning to take interest in India's healthcare, which was not necessarily, the trend of the past. And I certainly find that almost all the big sovereigns around the world, particularly, also from, as you recently know, Mubadala is also
Mubadala from the Middle East.
GIC is there with us in AHH. Temasek, you can call them as a semi-sovereign fund. So, you can see that whole momentum shift. And that's basically because from a valuation perspective where the sector is today, the sovereigns also have the ability to not just pay those valuations, but live through that valuations over a much longer period of time. So you can pay a lot more upfront, but how do you sort of hedge it over a long period of time? And I think the sovereigns have the ability to sort of do that. So I think, which is good from the way that, that effectively also means that once the scale is happening behind a couple of these enterprises, there are the long funds which will come in and take position. And that is actually very good for the sector.
Because you can really take it to the next level, and you can look at then, even a global play, because you have a much bigger canvas. Sometimes we just think of India, but I think whatever you do in India, there's an opportunity outside. Visa, I'll come to you next. So one of the areas, while the health services we can keep talking about, but Indian farmers been a poster child in a way for private equity. You've had all the private equities come in. There's been a whole story of entry, exit. And you were telling me maybe you think that, medtech would be the next poster child because, while services grow, medtech hasn't really grown at that same level.
Yes, Dr. Rana, I think if I go back to, in fact, I come from a pharmaceutical background, having spent nearly, at least about close to 10 years in the operating position as well as as an equities analyst covering pharmaceutical stocks. So, and it's really interesting for me to look at how this industry has evolved, because the Indian pharma success, I think, is clearly a case study in the world today. If you look at over the last 3-4 decades, how Indian pharma has evolved, right? Especially because of the process patent strength that India had. What India has done is pivoted to now become the largest generics base in the world today. In fact, it's not surprising that on a pharmaceutical level, you have India as, I think, the 4th largest, I think, consumer in terms of volumes of medicine, exporter of medicines. You have, I think, nearly 35-40% of the world's drug master filings, or the so-called US filings that are coming from India. And India has among the largest number of US FDA approved manufacturing plants. So if, before talking of the medtech, and I see a lot of, I think, early stage shootouts, but what has created that entire Indian pharma strength today is, I think, this entire wave of entrepreneurship and the ecosystem that one saw in the 70s and the 60s. In terms of the chemistry talent that India has built. India is always known for its chemistry and the chemical engineering talent. And plus, I think the wave of that first generation entrepreneurs whom we saw, right? The likes of Dr. Anji Reddy, Dr. Parvinder Singh, who created Ranbaxy. You have Dr. Yuko Hamid, who created Cipla. You have Dilip Sangvi, who created Sun Pharma. And I think this has made a big difference to the entire pharma ecosystem. So they took risk. They did not depend on we did not see private equity investment going into any of these companies. And these are now multi-billion-dollar companies who are listed, who have sustained a cash flow stream. They have gone international to the extent they now calling themselves as international pharmaceutical companies. And these are our own Indian entrepreneurs who have created that wave. And why can't we replicate the same, I would say, the same trajectory in any of the, I think we've done it wonderfully in healthcare. Similarly, in healthcare, we've had this wave of entrepreneurs who have created, right, the Apollo hospitals and Global Health and some of the other hospitals. But medtech has been one industry which is today, which is still having a huge import dependence. Yes, there are pockets of medtech, especially in, say, in consumables and maybe in a few reagents, maybe some of the low-end commodity spaces where Indian companies have dominated. But I can see that green shoots sort of coming about. But I think the big difference will again be the people who will take. So who are those bunch of dozens of entrepreneurs who will create that entire ecosystem and take it to that next level. In fact, that was exactly what I was talking with Dr. Rana, and he wanted me to articulate this particular thing. But government is doing a lot in terms of giving out, say, subsidies through PLI scheme, in terms of, I think the aspiration level of medtech entrepreneurs is also there. And today it is still languishing at probably much less than a $10 billion industry. But this is an industry which needs to go into that $50s and $60 billion. And this decade could be the year of medtech. I'm just sort of thinking about it.
It'll be great, and I think later we'll come to Himanshu, because I think medtech is one area which keeps coming in from, and there are a lot of experiences from the pharma which we really can use to medtech, because that's closer to medtech than actually to the service component. I'll next go to Professor Sen. So traditionally, if you look at healthcare companies, right, they are pipeline companies. So imagine a pipeline. I'm generating services, I have everything. And then people are coming, and they're basically on the other side of the pipeline is the demand, and they're coming in. And then guess what? COVID happens. You're generating the service and your pipeline's gone because no one comes in. So that is where the whole platform play came in. And we saw companies which were platforms actually beat hands on the companies which were just pipeline. So Professor Sen said he'd done a lot of work how platforms can actually add value, both from a geographical perspective and a value creation perspective. So how do you see this panning out in healthcare?
Thank you for having me. Since I am the only academic in the panel, so I'll just...
No, but you're a former consultant, so we embraced you, don't worry.
Yeah, thank you very much. So I'll, as per the norm of an academic, I'll bore you with some data,
Okay.
right, and then answer your question. So 2022-2023, the total amount of PE investment in healthcare was around 4.6 billion, and I'm talking about the Indian market. This was about 8 to 10% of overall PE investments. So now the exit value of healthcare was around 16% of total. So exit valuations are double the investment amount. So that answers one question, that there is empirical data that there is value in healthcare. So now my research says that much of this is actually being driven by the platform strategy, which is leading to operational improvements in healthcare providers in terms of EBITDA expansion, right? So I know I'm sitting amongst private equity people. You guys are a bit notorious about where the value is coming from, whether it is multiple expansion or actual operational improvement, right? The game is changing for the good. It is coming from operational improvement. Now let me give you an example to answer the platform question. Let's take the example of the biggest blockbuster exit of our times, which is KKR exiting from Max Healthcare in 2022, right? So the exit value of this deal was around $1.6 billion, and they achieved it in only 4 years, okay? And this was driven by significant EBITDA expansion. When KKR came in, Max's EBITDA was 9.7%. When they exited, it was 27.2%. Okay, so now that is phenomenal and historically one of the highest expansions we have seen in terms of operational improvement in the Indian healthcare space.
So the revenue expansion, just to explain, was much slower than the EBITDA.
That's right.
The whole value actually came in, not from growing the top line, but actually enhancing the bottom line.
Right, so now how did we achieve that? So now for the uninitiated, just a little conceptual clarity on what we mean by platform. Okay, very simply speaking, if a PE firm has 2 healthcare companies under its portfolio, right? You merge those 2 entities together to create a larger platform, and you get economies of scale and scope, right? That is how your top line and bottom line both get effectively more efficient. So KKR invested around 49.7% stake in Radiant Life Care and Max Healthcare, and then they combined these together. Okay, and then they put this guy Abhay Soi as in the helm, who's a turnaround specialist.
Don't say a guy, he's worth $1 billion.
Absolutely.
Right?
Absolutely. No, an academic has to take a dispassionate view, so, right? So now by combining these 2 entities, they gained both scale and operational efficiency. To give you an example, both these different healthcare providers had a medical tourism business,
Right.
which were running separately, right? KKR came in and consolidated that, and that resulted in a significant cost saving. Okay, so that is a typical example of how consolidation can happen in platforms. Now let's talk about top line. Okay, the focus on tertiary and quaternary care increased much more by combining the capabilities of both these healthcare providers, right? And what does that materialize into for the healthcare people in the room? Increased ARPOB. Okay, so the average revenue per occupied bed almost doubled post the merger of these two entities, right? So this is a great example of how cost consolidation and top line expansion led to operational improvement through a platform strategy. Okay, so that's one example. Recently, Blackstone has invested in Care Hospital in Hyderabad. Now, somewhat underrated, alongside this investment, they made another investment in Kerala,
KIMS.
right, which is KIMS. Okay, my hunch is another platform is in the making. If you
I
combine
don't
the
think it's a hunch. They openly said it's a platform.
yeah, but I don't think it has materialized yet.
No,
Yeah.
it probably takes time, and
Yeah.
you know, Vishal will be the
Correct.
expert to tell
Correct.
us on that.
So now if you combine those two things, we'll get access to 11 cities, 23 facilities, and additional 4,000 beds. Right? So you can see how you can get scale benefits of the platform strategy. So I think you mentioned about the source of capital changing. In addition to that, I think the operational model of transformation is also changing through this platform strategy. So I think it is here to stay, and it is definitely for the betterment of value creation.
No, I think you articulated it very well. And there is going to be business transformation. So if you're going to be one of those standalone hospitals trying to just do what you did,
Yeah.
you're headed for oblivion. Right. Himanshu, I'll come to you next. You know, you've seen this play for a long period of time. You know, you've been in healthcare for a decade. You're a global thing. See, sometimes in India, we got caught up in the euphoria, right? Everybody's only coming to India, right? They say about India, you know, India disappoints both the optimist and the pessimist, right? So the politicians will tell you we'll grow at 10%. Guys will say it's a K-shaped recovery, we'll go at 2%. But we on the middle class go about 5 or 6%, right? So just as a reality check, what do you think will really happen in the next 5 years?
I think it's a very good question, Dr. Rana. And first of all, thank you for inviting me to the panel. This campus brings back memories. My wife is an alum from here. So she graduated 2011, so it's nice to be back. And pardon me for my voice a little bit. There certainly is euphoria, there's no doubt. As an investor, I would have probably seen the same number of deals in the last 2 years as I have seen in the last decade. So there clearly is momentum, and I'd say for the right reasons. I'd give you a couple of stats, and which at least were important for me, and Vishal covered this a little earlier on number of beds and number of nurses. Per capita spend in India is about $100, circa. Per capita spend in China is about $1,000. Per capita healthcare spend in the US is $10,000. Right? So, if you just stare at those numbers, this is bound to be a multi-decadal growth. It can take any form. It can be a K, Y, but the only direction is upwards. And I think that is where you don't get to play as investors such multi-decadal trends in general. So which is why this is one of those fascinating trends, and you're seeing a lot of capital come into India. But why now? This has been the trend last 10 years also. I'd say two key things have happened, at least from our vantage point. I think the first one is consumer has become a lot more discerning. The standard of care is improving. The customer is actually asking for quality care. And this is, the awareness levels have gone up, especially post-COVID. Once they've seen what is the difference between a organized hospital versus a clinic next door. What is the difference between a branded, call it a medicine or a device, versus an unbranded device. And I think that adoption has already started to take off quite materially. And you're seeing this, Vishal, in a lot of your own cases. But the trend is real, the trend is to stay, and these are durable trends. I'm not talking about 1 year, 2 year trends. I'd say the second thing that has happened is regulations and government support. It goes unnoticed, but when Nachiket spoke about 500 million people getting insurance covered, you see this on the private side. A number of, in the last 3 to 4 years, we have a thriving insurance business as well. 10 percentage point improvement in private insurance penetration, non-trivial. And what both of these do is this create this positive effect of people looking for quality care. There is sufficient insurance penetration. We are under-penetrated, and as income levels will increase, they're bound to access multiple types of healthcare, right? They'll go to services, they'll buy right pharma, they'll use the right devices, and they'll do diagnostics. And this is why private equity companies as well as sovereign funds have been quite bullish in India, and I don't think that's going away anytime soon. I'd say the 2-3 themes that are interesting and which I expect to play out, which have been playing out historically, is the shift from unorganized to organized. It happens in healthcare hospitals. It happens in the types of drugs people start to use. It happens in devices, but I think that opportunity is here to stay. There's no debate in my mind that things will shift from unorganized to organized. I think the second big theme which is playing out is as customer becomes a lot more discerning, healthcare retail will start to flourish, which is like single specialty hospitals. It can come across multiple variants, right? It could be mother and child, it could be an onco, it could be eye for that matter. But I think those are flourishing and now they're gathering real scale. Earlier, it was an experiment, but now you're seeing that those are gathering scale. And I'd say the third big theme that we are seeing is consumption of pharmaceutical drugs, right? We are seeing a lot of big innovator pharma also looking at India. They've not been as successful, but I do think domestic consumption of healthcare will continue to rise. So coming back to your question on what's happening in the next 3 years, I don't think the party is ending anytime soon. I think you'll continue to find a lot of capital chase healthcare assets. Prohit made a very interesting point around the KKR example, right? I think what's also happening is investors are in general very data driven. It's easier to put capital, but very hard to take out capital. You're starting to see capital being taken out at scale. And that also gives a lot of confidence to global funds such as ourselves to say, okay, this is an interesting sector, because it's always easy to put up capital as investors, but very hard to take it out. But now we have positive evidence, not just in private markets, but also in public markets. So Indian public markets have accepted healthcare stories quite well. So as investors, it becomes a very relevant exit option for us. So.
No, great insight. So you said the party is not over, but who are some new players to the party? You mentioned one of them. Anyone new we can see into this party?
I'd say private equity ecosystem in India has developed in a manner that you'd find most players in the market today. I don't expect any new entrants. So there's obviously sovereign funds that have come with slightly more patient capital, but I think it's good. And I don't think we compete with the same sort of pools of capital. I think as slightly more active private equity funds, we take active role in board, driving talent discussions, driving strategies of the business, whereas sovereigns tend to be a little more patient. And you've seen pretty much all the private equity funds in the country look at healthcare assets, so have we. We've been actively looking at, in the last 3 years, we've done almost 3 deals in healthcare. And over the last 20 years, we have done 6 deals in healthcare, including these 3. So clearly, we are also upping our pace. But at the same time, we'd see the same set of people deploy more capital.
Thanks. So Vishal, back to you. So one of the big roadblocks we see is, accessibility is limited by affordability. And if you looked at a pre-COVID era, basically, there was a stagnation, Today we talk about the hospital beds and not getting a bed, but at that time hospitals were running sub 60 occupancy. So this whole insurance part, we talk about a 500 million, but then the whole voluntary or corporate insurance is small. There are 300 million people, which we call the missing middle. How do you account for them? Because otherwise demand is going to become static after some time.
No, that's a good question, Rana, and as Himanshu said, so if you take a look at the history of the world, and you take a look at across the developed world, the developing world, third-party payer ecosystem is the one that actually creates accessibility. Third-party payer system actually creates the momentum of growth, and third-party payer system actually drives the growth of the overall sector, right? Unfortunately, I think when you say what is slow to the party, and I think insurance is just sort of finding its penetration. Now, for a country of 1.4 billion people, if insurance is still about 26%, you know, private insurance is still about 26 odd %. I think we have a long, long way to go to make sure that that massive amount of affordability that the country needs to access better quality of healthcare is given through the third-party payer route. Unfortunately, and all our public healthcare ecosystem initiatives around insurance, around the third-party payer system, you know, whether you call it Ayushman Bharat, whether you call it Aarogyashri, whether you call it Arogya Bhadra, whatever you may call it, whether it's a state scheme or a central scheme, I don't see longevity for those schemes, right? Because ultimately, each one of these schemes have to be built for perpetuity. Sometimes I feel that these schemes are being built for the next 5 years, for whichever government is out there, and then it is left to the next one to sort of continue with it or to discard it, right? And you can see the constant flux that's happening in many of these state-level health insurance schemes. So I think there is a lesson over here, and which is that if you look at the world, and while the US may not be a great example because it spends 16% of its GDP on healthcare, but if you look at every other ecosystem, the third-party payer system has to come out very strong in India for both accessibility and affordability. Because if payers are going to be innovative in terms of the way that they're thinking of putting together products and services, you are going to find that product and service actually get more relevance on the provider side. Right? So if today cancer is a big issue and that cancer is a big problem that we are facing in the country, then the more number of cancer insurance products that come through the insurance will find itself meaningful to the cancer providers and the multi-specialty healthcare providers which are looking at cancer as a therapy to push, right? Basically because it's an expensive therapy to actually install and the capex requirements and all that are high. If you look back again, and that's a classic example, look at United Healthcare back in the US and how United created Optum as its big catalyst for innovation in healthcare. Right? Which Indian private health insurance company today is even thinking like an Optum, is even thinking like United Healthcare? Right? We are fighting the basics of trying to cap price every year and using that as the only medium of growth, which cannot be. Right? So there has to be, insurance has to be the biggest driver for innovation of healthcare models and the biggest driver of creating new models. Right? So I think that's where we are lacking today. That's really what the next catalyst has to be. That how does the third-party payer system actually create new innovative healthcare models? And that's why you look westwards and you find that companies actually become sustainable very quickly. Right? You start in 3-4 years time, you have $50-60 million of revenue, you have decent amount of margin, you can just continue to grow on the back of that. I personally tried to do that home healthcare stuff, in the country, which was far ahead of its time. And we struggled for growth. Why? Because there was no third-party payer system, and it was all out of pocket. And you know how the Indian consumer, out of pocket is just so sensitive to pay. So if there is a catalyst that needs to be put in place, and if the capital is the catalyst, then we need a very different approach.
That's true. So just to double down on that, one of the things which could crash the party is, the government's moved from a provider to a payer. It's not being a very efficient payer. For a poor guy, previously he could go to a government hospital. Today he goes to a private hospital, probably doesn't. The other second problem in this whole ecosystem is there's one level of care, right? So if you have a problem, you get your joint replaced, but it gets infected. the next level of hospital is not within that network.
Yeah.
So you're probably worse off, right? You probably could be limping. So isn't there a thing that, the government will push things which are socially relevant but economically inefficient? And this has happened in China.
Yeah.
Isn't that an overbearing risk?
No, that is truly, and I firmly believe in that, right? Because I think we need to continue to think about healthcare from a social relevant perspective, particularly in a developing country like ours. And we just cannot shut our eyes to it, whether you're on the private or the public side. But I think, Rana, the question, frankly, is that we both have a role to play, right? The private and the public have a role to play. You cannot, and at one end, if the private has to take the responsibility of creating the infrastructure, and then you're going to continuously come back and say, why are you making profits, right? That is irrelevant, right? That conversation is not correct, because you either create a catalyst of change and become that catalyst of change by spending a lot more GDP on healthcare, or you have to then become a catalyst for the private healthcare ecosystem to go out there and create more growth. So today the tier 2 city expansion is happening by whom? It is happening by the private capital that is being put behind all these enterprises. Otherwise, do you think that all our tier 2 cities around the country would have had private healthcare at all? The answer to that question is absolutely no. Because it takes a lot of guts to go and put capital behind, building healthcare, for-profit healthcare enterprise in some of the smaller tier 2 cities around the country. And so we've had some very efficient public organization, charitable trust organization, which have done that for decades in many of these cities. But it has sort of remained very focused to a few enterprises. So I think that's where really the relevance has to come, right? In terms of that we need to be socially relevant, but healthcare is also about being economically efficient. And that can only happen if you start putting together management principles behind this capital.
Exactly. Because if you're not economically efficient, you'll always remain subscale. There's no incentive. It's that trust hospital which has never expanded. Been there, great hospital, but the impact is limited. It just looks at a 5-kilometer radius. Visa, I think as a focused healthcare fund, you have a very unique experience. You really started off small with a smaller ticket size. The whole success of healthcare can also be looked at your fund, because your ticket size has grown up, your fund has become exponentially, thanks to the way. What have been some of the learnings, looking at the macro component, and where do you think we are going?
So we've been now a healthcare investor for more than a decade or so. And it's actually a journey, and it's a very interesting journey to see how that has shaped to where India healthcare today. Maybe before directly answering in terms of our learnings, I think it's important to, as we see the healthcare landscape today, and Vishal talked about, the huge demand-supply mismatch. But if I were to pinpoint that further, right, just across the 2 Ds, say demographics. While overall India is considered young, but there is a huge growing middle class, and by the end of the current decade, you'll probably require nearly 3x the kind of healthcare spending for this kind of a middle class, So from a demand perspective, this is a very important parameter. You can also look at demographics in terms of, say, the people above 60 years. There's by the end of the decade, we'll have 150 million people above the age of 60, but there is no formal institutional care today available for, say, in terms of senior living, and that's all currently cropping up. You're seeing a new age of businesses coming, right? Then you address the next D, which is from a disease standpoint. Post-pandemic, we are now dealing with a triple disease burden. Not just a chronic and an acute, but also a pandemic-related disease burden, and we are yet to feel the impact of that, and that's again a very big demand aspect. We talked a lot on insurance. I think insurance has played a tremendous role so far. At least on the inpatient side, you've seen significant, I think it has moved the needle, but still out-of-pocket insurance is still, out-of-pocket expenses is still very, very high today for a country of ours. On the other hand, if you look at from a supply side, what has happened is, you know, the human capital is expanded. You've seen infrastructure also. Everybody talks about, you know, patient to bed, doctor to bed, and those kind of things. But the needle has moved. If you look closely, the needle has moved. The infrastructure gap is sort of turning, but it's still not up there, right? But the big thing that has made the difference is the huge private capital that we are standing with today. You know, India has attracted, you know, at least in the last 3-4 years, every year we've attracted $4 to $6 billion of private capital in healthcare, and healthcare is, I think, among the top 3-4 in terms of from an economy standpoint. So in such a context, for us as a fund, how have we as evolved? You know, coming to Dr. Rana's question, in terms of as a fund, yes, we've gone from a smaller ticket size. So we've seen all this happening over the last, you know, decade and a half. And what we have sort of grown, given our ticket size, which has moved from, say, initial $4-5 million right up to now about $10-15 million, we have found those new business models where we can put money to work. I'll give you a classic example, medical oncology, right? You look at the entire oncology space, you know, it's mix of, you know, oncosurgery, radiation oncology, and then medical oncology. But medical oncology is very interesting, just chemotherapy and pharmacy, etc. That's a daycare. It doesn't need to be in a hospital setting, right? So we recently invested in a chain of medical oncology clinics. So they were it's actually promoted by 4 medical oncologists, and now they have like nearly 25 plus medical oncologists on their role. We're growing this business from about 8-9 centers to going to about 45-50 centers, and that's the proposition. So, and this is like a cancer concierge service kind of a thing. It's a new business model today. They are the largest in the medical oncology chain in the country. You look at AI in radiology. So this is again something where we have put money to work, right? So over the last decade, scan volumes have grown exponentially. X-ray volumes have grown, but the number of radiologists has not kept pace to that. India still has, I think, less than 13,000 radiologists in the country. So that creates an immense problem in terms of radiologist productivity, in terms of radiologist burnout, right? So they are probably considered one of the most depressed people in the community because of reading so many scans, and every scan will have to be signed off, every X-ray. So effectively, and that's where AI comes to use. So we put money to work in an AI in radiology model, and which is now US FDA approved, and which is now, you know, reaching the global shows as well. So this is how we have crafted. I think this is something which has worked nicely for us from a new business model. On the other hand, I think now if you look at from a human capital, ultimately all these businesses are driven by human beings, by promoters. The promoter mindset has changed significantly in the last 10 years. They are now more open, and that's also one of the reasons probably you're seeing a more, you know, a buyout deals happening, right? A KKR, those kind of deals happening, because promoters are now more comfortable to give away control. The control mindset of the promoter and the founders and the management team has significantly evolved, and you're seeing value. So effectively, capital and value creation has made an impact. And it is an impact at a I would say, in terms of creation of value for the businesses, for all the stakeholders. It's an impact at an economic level where your jobs are created, your health beneficiaries are created. So you're seeing a lot of those impact KPIs also being moving the needle. But there is also a certain, I would say, not so rosy side, right? I talked about a couple of rosy points, but the thing is, if there are also instances where I think we've also had faced some of these challenges. Any of the management teams who are playing around with compliance, with governance, with systems, processes, they are getting brutally punished. I think investors just don't have time today to look twice towards these kind of companies. I think, and that's something I think as entrepreneurs, and as I'm sure there are a lot of budding entrepreneurs out here in this, I think we have to take care of some of those hygiene factors, which is so important today. And I think private equity has burnt their hands at the cost of compliance and governance and stuff like that. So this is one big, I would say, area one needs to focus intensely. And the second big area is execution. You know, you go back to a lot of private equity models, say 10, 15 years back, and what they were forecasting, say, at the time of exit, I think the numbers are very different, right? So execution challenges, and it's not completely in your control, like, you know, let's say you're setting up a diagnostic center, you're putting a PET scan in one of the centers, and you're assuming forecasting that, you know, you will have a regulatory approval in 4 weeks. It just takes maybe 10 weeks because the regulator has not figured out some new norms that have come out, right? So because of that, they were delayed. So some of those execution risks are something we will have to build a margin of safety. I think you have to go back to that basics of investing in terms of this. So these are some of the things that have helped us navigate, and I think, you know, this is how I think you go from small to big.
No, I think you articulated it very well. You know, you have capital and you have value creation, which creates a virtuous cycle. But on the other hand, I think the whole hygiene component and the execution risk always need to be kept in mind. So, so I think that it keeps, I think healthcare keeps giving you a reality check. It's just like your body. Every year when you take a blood test, you find something's gone wrong, right? And that's how the industry survives, right? So I'll come back to you, Professor Sen, again. So I think one of the things which the whole healthcare industry is, you know, we've not really been technologically savvy, right? Even today, most hospitals don't have electronic medical records, you know. Now suddenly Gen AI has come into the room, right? That's the big elephant in the room. Now it's going to change a lot of way, you know, already it's changing the way banks function, right? So I don't need, you know, 30% of my staff. So private equity will be asking you a question, how's Gen AI going to impact my future investments?
That's actually a great segue from the radiology example that she just gave, right? To be very frank, like we as academics are also grappling with this whole issue of Gen AI, AI, ML in general, to the extent, and like I'm a brutally honest person, right? So it's even very hard to define where the boundaries are, right? Is regression machine learning, right? Is a calculator machine learning, right? Where is the boundary? Okay, so so here are a few, the ambit of activities which come under Gen AI, where there is a huge headroom for growth in India, right? And they have already shown some proof of, you know, adding utility in the US models, right? So things like tailored treatments to patients by looking at their data of past history. Automating diagnostic procedures, radiology labs are a great example, right? So now for predicting very accurately which tumor is malignant, right? You don't need the hunch of the radiologist. You have algorithms which can tell you that, okay? In the pharma domain, there's a lot of potential in new drug discovery and potentially in predicting interactions of those drugs, right? Because those interactions can be very complex and not necessarily in the second or third order of polynomial, right? Because there are so many compounds involved in that. So machine learning and AI is helping in that. And other peripheral things like virtual health assistants, for example. Now, one company or one model which I would like to direct here, I'm sure many of you would have heard of it. It's a healthcare provider based out of New York City. It's called Montefiore, right? So Montefiore is at the forefront and at the pioneering level of adopting many of these Gen AI tools. And they are doing exceptionally well. As of today, in Montefiore's radiology lab, there is only one human being who signs off on what the machine is giving. And then he passes it for the doctor to do a clinical correlation, okay? So now those kinds of radical things, there's immense headroom for growth in the Indian market, and definitely we are going to see an uptake of that, which can drive efficiency. Now, the second important point that you mentioned, what does it mean for PE industry? So sorry for digressing a little bit, but in semi-jest, it's a healthcare conference, so let me take a very healthy example, McDonald's, okay? So when I was in business school, one of the case studies which still sticks with me is that I was asked by my strategy professor which industry does McDonald's operate in? Right? And the answer is, it is not in the food and beverage industry, it's in a real estate industry. Because their fundamental business model operates like a real estate leasing firm. Okay? So now, come back to 2024. Is Montefiore a tech firm or a healthcare firm? Okay? If you are a private equity firm, what will be the parameters of due diligence on which you will do the due diligence of a Montefiore? Is it RPOP? Is it survival rate? Is it productivity? I don't think so. Right? So for PE firms have to up their games and relearn new metrics to calibrate and bake in these values of technology into their due diligence processes. Right? And I think that is going to be the fundamental change, at least in the near term, when we are adopting these strategies. So that's my view on that.
No, I think very interesting because the whole paradigm is changing, right? By the time you enter and you exit, it could be a very different firm.
Yeah.
You know, and obviously everybody is, one of the best examples is WeWorks, right? A real estate company masquerading as a tech firm. So you got to be careful, you don't land up with a real estate firm. I think you made that point very well. Himanshu and Nachiket referred to this, is in India, the delivery of healthcare is very subscale, We are 1 billion people running after 1 million providers. The average size of hospital in India is less than 10 beds even now. So, as the health services grow, we've seen globally that the supply chains become very, very robust. But I don't think we have those supply chains to really look at the growth, which both Visa and Vishal are, predicting.
Yeah.
So what are some of the global examples we can learn from? Because that's an area we need to put in place.
Yeah. It's a fair question, Dr. Rana. And I'm also mindful of time. I know the clicker is there. So I'd say we've spoken about consolidation quite a bit across the services side. Let me also touch on the supply chain. So a couple of, again, stats for us. The top 5 retailers in India comprise less than 10% of the revenues. The top 5 distributors in India of pharmaceutical products also comprise less than 10%. You pick any country globally, those numbers will be between 60 to 80. In the US, they're closer to 90. Like the top 4 or 5 distributors have really created this stronghold where they actually drive the prices down, increase affordability. Now, US is a different example because the drugs are still expensive, but I think there is a natural course where most of the supply chains get consolidated, and it fundamentally results in like efficiencies for the ecosystem. It's not just about consolidation for the sake of consolidation. It's actually around you can get access to drugs faster. There are no, the medicines are genuine. You also have quality approved medicines going across the board. So I would say I see that direction of travel. I think India hasn't, so the reason we have not had consolidation so far has been because of a bunch of legacy reasons. We've had associations in each, call it states, districts, who have had very strongholds around I'll control distributorships, I'll control retailerships. So I do think there is a role to be played by backing market leaders in these categories, distributors, retailers, where you can actually accelerate the scale of some of these businesses. Just to sort of contrast where Tata Healthcare Fund operates and we operate, I think their models are a lot more driving innovation, right? Driving interesting new healthcare models. Whereas where we play is a lot around scaling those models once they've been proven. And I think what we try and do, companies of our side, not just us, is to be at the forefront of backing some of these market leaders to continue to build like a large franchise. So one example closer to home is a company based in Hyderabad called MedPlus. They're the second largest pharmacy chain. They were opening 200 stores for almost like 15 years. We thought the model was interesting. We said, why don't we back you with capital? They started to open 1,000 stores. Interestingly, 60 to 70% of these stores are coming up in tier 2, tier 3 markets, right? Where access is tough. They look for affordable. The proportion of genuine medicines is high, right? And some of these, this is one such example, but there'll be many such examples. We are seeing this also on the hospital side, right? There have been people who have come in and created bigger, like we have Medica Bazaars of the world, we have Acnomeds of the world that are trying to consolidate hospital supply. So I think we are moving in that direction. It'll still take us some time. I think by design, entrepreneurial spirit in India just tends to eke out efficiencies across the board. So we may feel like we don't have an efficient system, but we still do for some reason. It may not be fully compliant, but that's okay. But it still gets to an efficient system. So I do think from a global perspective, some of that consolidation on the supply chain will occur, both on the front end side as well as on the back end side. So retailers as well as suppliers, distributors.
No, that's great. I know we are little, how much time do we have for question answers? 1 o'clock. Maybe, so I'll go through and I'll ask the panelists to be, you can't be on a panel and not ask Vishal about single specialty, right? So, he's the emperor there. So very briefly, Vishal, again, the maturity of the model, and we're seeing most values now outside the hospital, right? What was to be done in the hospital, unless you're willing to pay, is going to be difficult. How do you see this evolving, very briefly?
Yeah, Surana, obviously I'm now completely infatuated with this entire play of single specialty. So before we started AHH, AHH is like 7 years now. We started AHH in 2017. And that was right here in Hyderabad with an investment that we made in this company called AOI, with that one center here. And then evolved it very quickly into 15, 16, radiation centers, medical oncology, surgical oncology across the country. We obviously then exited that to Varian in 2019. But, somehow, for a long period of time, and in my vast work experience, have largely led the entire multi-specialty play. And I realized over a period of time how difficult that scale gets to, particularly when you're putting together a 300-bedded hospital, from the time that you now start digging ground to the time that you break even that hospital. It's a 4- or 5-year journey. And that gets tough, right? And particularly at one end, we are talking about the massive demand-supply gap. And on the other hand, we are talking about how much time and execution it is taking to put these big boxes. So what is the contra thesis to that? And that is how we came up with this entire idea that single specialty is probably the way to go. But more importantly, doing multiple single specialty enterprises on one healthcare platform is something which has been unprecedented in this sector, not only in the region, but I think largely across the world too. You don't really find on what platform multiple single specialty organizations taking shape. So we invested behind Motherhood, which is in the mother and child space. It was 3 hospitals. Motherhood is now going on its 27th hospital. This is 2017, 2 years of COVID gone by. So we've added a lot of depth over there. We invested behind Nova, the IVF chain. This was 2019. Nova was already in the market for about 10 odd years, 19 centers. Nova is today going on its 80th center. We are in 44 cities. 60% of our work that comes today is from tier 2 cities, right? So while IVF, everybody thinks about is more an urban metro play, but we've actually demonstrated very, very quickly that if you put the right model in work, and this is with top-class clinicians, right? We don't ever compromise on that side. So that has worked pretty well. Then we have now invested behind urology and nephrology in this company called AINU over here in Hyderabad, which I believe from the 7 hospitals that's out there today will go to about 15 to 20 hospitals around the country. And all this has happened over a 7-year time frame. So talk about execution, talk about capital deployment, talk about growth, talk about unit economics, because in each one of these enterprises, we now are sitting at ROICs of about 30%. In Nova, actually, my ROICs are in the region of about 40-odd%. Right? So I think in 7 years' time, there is a complete shift that we have sort of demonstrated around how the single specialty play can actually be built to scale. Obviously, at the back end, there is that whole synergy of running it through the AHH ecosystem, which is one common team across 4 or 5 different functions, while the front end continues to be run by the companies themselves. But the common thematic view that AHH brings is across functions of supply chain and projects and human resources, and then the entire concept of tech and how do you enable tech across this portfolio of companies. So a lot of people start thinking, is AHH a fund? Is AHH an investing platform? What exactly is AHH? And I have basically turned back and say that AHH is an operating platform first, and it's just that investments come through the platform into these various companies. So I think, and these are all majority controlled by us. So the destiny of these enterprises is also being controlled by the AHH team, which, as Vishal was saying, that it ultimately, we are seeing this whole trend that if you are in control of your destiny, you're also in control of the amount of capital that you want to put behind it. You're in control of the strategy that you want to push behind the enterprise. And you are in control of the unit economics that you want to bring back. So the return on capital employed, which I think has plagued this industry for a very long period of time. So while we are seeing these billion-dollar enterprises getting created, exits happening, what's the average ROIC within the sector? The average ROIC in the sector is less than 15%, right? Which shows that all the multi-guzzler institutions that we have created, right, even at 20% EBITDA margin, their return on invested capital is less than 15%, which means that effectively you'll keep on putting more and more capital to work behind these enterprises. So I think we've got a model going now, and hopefully, the way that I see this, it'll expand across a couple of more single specialties on the AHH platform. And besides a few of them which require a lot more complexity, like neurology, neurosurgery, I don't think can go out. We will see a lot more momentum around this. And scale, rapid scale.
Right. No, and I think it's also a model you're building which can tomorrow actually be replicated in other geographies, because it's got everything. You could take it to another country and do a plug and play.
Yeah.
Maybe the unit economics are different, the ground realities are different, but the whole technology makes it much more replicable, rather than if you were to take a multi-speciality, because it just doesn't work in another geography.
No, you're spot on. There are going to be 900 people, 900 million people on the wire, on the fiber in this country. If they can use Swiggy and Zomato for their food, why shouldn't healthcare start thinking as to how the fulfillment can happen on the last mile, right? So I think there is a lot of opportunity if you start thinking innovatively, and if you start thinking from a very different lens, rather than on a per bed lens, and say that, okay, we need to make these 400-bed hospitals for them to become viable.
No, thanks. So Visa, just like you spoke about, that's oncology care. So what are maybe 2 or 3 areas you think now will go ahead, which you probably haven't invested?
Well, to continue on, I think Vishal has set a fantastic, I would say, prelude from a single specialty is now a known concept, right? We've also invested only in single specialty, but that's more a function of our ticket size. But if I were to look at the entire care continuum, right? Let me maybe point to what Aparna mentioned, right? In terms of the digital aspect, or the other lady who mentioned on primary health care. It is now, I think, moving beyond episodic care to something on the right side, which is where you have the assisted living, the senior living, the aging, that taking care of that entire demographic. And on the left-hand side, for all you know, maybe primary care in this coming decade could potentially be something worth viable looking for. It hasn't been so far, but it could something which could be viable for a private equity investor, right? Because we need capital and we need efficiency, I think. And I think maybe a PPP, through a PPP, so that I would say is probably one way to look at the care and embed technology across this. The second, obviously, I spoke, is medical technology, because import dependence has to come down. We've seen it happening in pharma, we are seeing it happening in medtech, we are seeing it happen in few pockets, but I think that should come down. The other thing, I think what Himanshu spoke about is the distribution, the pharma, the entire supply chain, right? So, of how do you sell medical products, how do you sell pharmaceuticals? it is so fragmented, and that needs consolidation. So if you ask me, I would say more specialization across the care continuum, the entire import, or indigenization of medtech, and I think the consolidation in pharma distribution or medtech, medical device are the three things which I think could be potential models maybe.
No, excellent.
This
And
decade.
I think we always talk about a demographic dividend, but by 2030, I think many of us, 1 in 5 Indians will be above the age of 65. So, that is an ecosystem no one's really looked at. And, it's not about healthcare, it's about a senior care ecosystem which needs to be created. I mean, healthcare is a part of it, and I think that's going to be a very, very big opportunity. So I'll come back to you, and I think one of the things, which to take a contrarian view, is private equity is looking at returns, it's looking at an entry, it's looking at exit. Now, healthcare somewhere is also a public good, like education, So how do you balance these two things?
Very tough question, I think almost in the realm of philosophy rather than economics. So actually I would categorize this whole thing of public good quality into two segments. And I think because the forces there are completely different. One is the urban segment, one is the rural segment, right? If you look at urban quality measures of healthcare, with increased privatization over the last 2 decades, I think there is hardly any complaint from the consumer on the quality of the core healthcare that a middle class or an upper middle class person can afford. Okay? The problem there lies in the peripheral services of the healthcare provider. Things like billing, things like claims processing, things like administration while you are in the hospital. Okay? Now these things, there is definitely scope to automate them to an extent, right? Give them handy, maybe on an app to the patient, and improve them. The concerning part which has come to the fore right now, and this might annoy a few private equity and healthcare providers alike, but I will lay it out there, is the perception that private hospitals are money-making machines. Okay? So now there are notorious cases of renowned hospital chains which keep patients on ventilators just to keep their occupancies high, right? Instead of declaring them dead. Okay? Now the EBITDA expansion that I talked about, if the perception of these activities, not necessarily the activities themselves, if this perception is sticky, those operational improvements are not going to be sticky either. Right? So that has to fundamentally change. How does a PE firm include that? Alongside the financial metrics that you're evaluating during the due diligence phase, have these hard quality measures included in the due diligence phase itself. Not only during the initiation of the deal, but in the post-governance monitoring as well. Right? So that is my answer on the urban sector. The rural part, and here I'm absolutely in sync with Vishal, the core delivery is the problem, right? If you move beyond tier 2 cities and all, right, the basic access to healthcare, for example, is a huge issue, the basic quality, basic hygiene. And there I think, Vishal, you gave a great suggestion, right? Why not have a technology which is a Zomato for doctors, right? You need a sudden cardiac patient in Ajmer, right? Zomato, a cardiologist from Jaipur, okay? So we are, I think, going to see disruptions like that, which can help in efficiency in the rural sector, right? And maybe PE firms should be evaluating and strategizing on those aspects as well. So that's my take on that.
No, that's excellent. And I think you obviously, the whole idea of, what counts as value,
Yeah.
Both on the clinical, the non-clinical, but more importantly, what could be, what we don't see as value, but actually can disrupt business continuity is very important.
Yeah.
If I may add to what Professor Sen just said, I think there's it feels, the perception is, private equity is focused ruthlessly on numbers, which is true by the way. But I think ESG as a concept has actually taken a very, very strong agenda in every board meeting. And I'm sure, my fellow panelists would agree. And it's also something that is being monitored by our investors. So ESG, which includes some of the parameters that he said, right? Not just core financial metrics, but also softer metrics around how the business is being run is actually quite core. It's something which is being asked, and it's very relevant for how we are monitored and our performance is monitored.
So Himanshu, I'll go to you next, and we spoke about pharma, medtech, and maybe services last, right? But I think especially on the medtech, and I'd recently gone with a global CEO of a medtech company to meet the health minister, and all he was saying, make in India. So this guy said, that's fine, but where is the demand? It's 2% of my market today. I can make all in Vietnam in 2 weeks what India consumes in a year. So obviously, so is it the right time for actually an Indian medtech company to manufacture and distribute to the world?
Look, I'm a huge fan of this thesis, huge fan. I mean, we are putting out investments behind this thesis over the last couple of investments, and I'll tell you why. Across healthcare formats and subsegments, you've seen med devices actually as the fastest segment. It's actually grown at, call it mid-teens compared to early teens and double digits for most other healthcare categories. The market structure is interesting. In India, put a number, let's say $10 billion is the total med devices consumption. 75% is dominated by MNCs. Only 25% is dominated by Indian manufacturers of med devices. And the reason for this is the following. I think you need serious R&D dollars to be spent when you're doing med devices. These are things that go inside your body. You can't take a risk. You can't extract it back. And hence, when you have Medtronics, Boston Scientifics, of the world that come to Johnson & Johnson of the world that come to India, they have serious dollars with which they're deploying, creating products. Now, interestingly, what has happened in the last 10 years or so is domestic manufacturers have actually gained scale. Earlier they were in the hundreds of crores, now they are nearing 500 to 1,000 crores. So that's one thing that has happened, and it's also given them the muscle to invest in R&D. The second thing that's happening is most of the Indian manufacturers have a huge cost advantage. Typically, an Indian product is 1/3 of an MNC product, like-to-like categories, most categories. However, quality was always a barrier, and over the last 10 years, I think that quality gap has narrowed quite meaningfully. So now people look at devices, look at the functionality of these devices, they don't just go by perception. Frankly, doctors have also become very, very cognizant that these are equally good devices. Think about this as a German car versus a top quality Indian car. Right? That's happened. The other thing that's happened is by virtue of their low cost manufacturing, they have huge distribution reach also in tier 2, tier 3 markets. And now is also the time when exports market open up. So this is pharma 2.0. 20 years later, what pharma was 20 years back is actually happening in med devices. And hence you're seeing a lot of these med device companies that are competing toe to toe to start with in entry and mid segments and slowly inching in upper segments. And I think that that direction will continue. I'll not be surprised if we create billion-dollar companies in the next decade, which are medtech companies out of India. As I was telling you, Dr. Rana, I'll call these like Indian champions for the world. We have created like 10 global generic pharma companies. I think we'll create like 5 at least top med devices companies in the next 10 years.
No, I think that's very encouraging, and it's a great opportunity for most people sitting in the auditorium. Do we have some time for questions? We don't have. So unfortunately, but I must thank the panel. I think amazing insights, and I think a very practical approach to what's happening. I'm sure you benefited for this. I must thank my panelists, and I must thank all of you for being a wonderful audience. Thank you.